tomorrow morning. The CPI is due out. September. The August report is going to be due out September 13th. That's going to be Wednesday, 8:30 a.m. Eastern Time. That's 5:30 Pacific Time. And then Thursday, the PPI report comes out. These are all indicators about the inflation coming. So the August report comes out September 14th at 8:30 Eastern Time. Consumer report inflation has gone down the last couple months, and it is on target to meet the Fed's expectations tomorrow, whatever that means. But my fear here is crude oil. When we were hitting these numbers down at 3, it then went back up to 3.2. These went down because fuel was down like 28%. Now take a look at crude oil. Just 3 months ago, when we were getting that 3 and 3.2, oil was down, and now look what it's done over the last month here. This is going to be the August report. The September report has got fuel climbing from July, August through September, and continuing on into this mid-September. So that's my number one concern about whether or not we're going to hit the reports. If the CPI number comes in high, I think there's going to be a drop in the market right away because of the inflation going up, not meeting the Fed's expectation. Looking at this sector here, this is an ETF that follows oil. If you would have bought this back in June, 3 months ago at 27, say to 28, make it simple. So if it were at if it went up 14 points, that'd be 50%. So that would take you up around 52 or 42. So we're right at 50% gains in just 3 months. That is a lot of upward momentum going up. The price of gas is just going to keep climbing up. This is a Vanguard Energy Fund, same thing. It was down in May when we saw these low numbers here at 3 and 3.2, but I don't see how it's going to stay low because this has been climbing up, and it's definitely been climbing up from July to August. So I'm a little concerned that the CPI is going to go above the Fed expectations. It's going to be higher than the 3.2 the Fed has been asking or driving to a 2% rate. We got also labor not slowing down. Unemployment, they says a little bit softer, and it helped the market a little bit, but in the end, it's not nearly as high as the Fed is trying to get it to. So Fed is trying to raise rates on the mortgages to raise the unemployment, to make it so more people will be unemployed is what we're trying for, to lower wages, which in turn is supposed to drive inflation down. But he's been doing this for a year, and it has had no effect on anything he's trying to do. But that's where it's going to go, and as long as there's fear of the Fed raising more rates in the next month in November, it's big concerns. Also, September is usually the softest month of the year for the stock market, and I'll do another video on that.